a recessionary environment.
Okay, talking about IT, tomorrow HCL Tech 2 will be reporting numbers, and here the key is going to be, does the company hold on to its this year's margin guidance? The margin guidance for HCL Tech for FY23 is 18 to 20%. In Q1, when margins came in at a decade low, HCL Tech already moderated the margin guidance, and they said margins will be at the lower end. But even then, the street is not convinced the company will be able to meet this margin guidance, right? Kotak is, I think, anticipating 17.8% margins for this year. Even Ambit is anticipating lower margins for this year. The fact that the company will not be able to meet its margin guidance. So the key this time is going to be, does the company reiterate, hold on to its margin guidance? The numbers are up for you on your screen. There will be a revenue growth that we are anticipating. Margins, according to the CNBC-TV18 poll, will be up 40 basis points, impacted by a full quarter impact of the wage hikes. And again, other things like, commentary on deal wins. Does the deal win momentum continue, hiring, etc.? All the soft issues will also be fairly critical. Abhiram, we've spoken a lot about IT. Wanted to get your thoughts in on banks. Now, in the banking space, in the insurance space, you like stocks which are under-owned and are less expensive. Could you give us a hint? Where is this? Because, the consensus view appears to be overly optimistic across the financial space.
Yeah, now, like I mentioned to you earlier, Reema, within the banking space, actually, there is a case for just the top 3 or 4 high CASA banks. And I can't get any more specific than that, but those banks gaining market share in such an environment. You see, when you have a slowdown or when rates are going up and credit growth starts to slow, then the market share tends to get, again, disproportionately move towards the larger high CASA banks. And I think that is the area we'd like to focus on. On insurance, the numbers have been okay-ish so far, not the most spectacular numbers, at least over the last 1 year or so, but I do see that as a structural 5 to 10 year theme. Basic point here is that Indians are underinsured. As a country, we are underinsured. And that theme will go on for a considerable period of time. Even within the top 3 or 4 companies within the insurance space, we see a 15 to 20% kind of a growth CAGR and therefore a compounding effect. So that's a space that we continue to like.
All right, Abhiram, we'll leave it there. Thank you very much for your time. Great